Okay, so here we are in Trade Navigator, and what we're going to do is we're going to chart this stock from scratch. Before we do that, let me give you a quick orientation into the tools that we're going to be using. If you look up here into the upper section of your screen, you're going to notice a little button that says crosshairs, and it's got a little crosshair tool. And when we click that, you're going to notice that your cursor changes into a crosshair. And so we're going to use that tool. We will switch between the basic pointer and the crosshair back and forth for your cursor. The other tool that you're going to notice in here is you're going to notice there's a couple of lines up here, a couple buttons I should say. One says close line, one says candles, and one says OHLC. That's for open, high, low, and close. And if we click between these, you're going to notice how the chart changes. So just take a look here. There's your open, high, low, close bars. Here's your candlesticks, and here's your line chart. Now, there's another way that we can change the view between candles and closing line, and that is we're going to press the key B, the B key, just B, on your computer keyboard. And if you press that, it will toggle between your candlestick, your line chart, and your bars. You're also going to see this blue and green and red one. That's called your Bollinger Bars, and that's just in the cycle that, for whatever reason, Trade Navigator put it in there, and so you'll see that in the cycle there. Now, there's another set of hotkeys that I will frequently use, and if you ever notice the chart zooming in and zooming out, you may wonder, how does he do that? And the answer is, there's a couple ways. Number one, you can push the buttons at the top that has the bars plus and minus. And if you do that, if you do the plus, it will add more bars. If you do minus, it will add less bars. And the other way you can do it is simply press plus and minus on your computer keyboard. So right there, I'm pressing plus and we're getting more bars. And right here, I'm pressing the minus key and we're getting less bars. So when you see me zooming in and zooming out really quickly, that's how we're doing it. And then finally, the last key command that you need to learn about is when we've got the crosshairs selected, you're going to press the key command Control, and we're going to click with our mouse, and that will add a horizontal line to your chart. And so you're going to see me doing that quite often, and that's how we do this in Trade Navigator. Okay, now that we've learned a little bit more about how the software works, what we want to do is we want to get over here and actually start charting a stock that we've never looked at. So the stock that we're going to look at here is Halliburton, ticker symbol HAL. And the first thing I'm going to do is I'm going to toggle over and I'm going to have my line chart selected, as we talked about in the video on how we start drawing our charts. So the next thing we're going to do is we're going to come up to the very top, and I'm going to snap a line in here at the very top. Again, that's a key command, Control click with Trade Navigator, Control and click with your mouse, and that will put this horizontal line right at the place where you had your crosshair, which in this case is the top of the chart. Now what I want to do next is I want to come down to the very bottom that I see on my chart. I'm going to Control click again and put another line in here. And now what we've done is we've started to kind of what I call box in or frame in the chart. And what we're doing is we're bringing our attention. This is the top, this is our bottom, and we're kind of starting to cut the noise out. Realize there's a lot of noise on this picture here. We're just kind of starting to build a picture frame and really focus on the area that's right here in the middle of the screen. And so what I want to do next is I'm going to come through here and we want to actually draw a line with every major turning point of support and resistance. So I'm going to start at the bottom. You can start at the top and work down. I typically start at the bottom and work up. I don't know that one is preferable to the other. But what I'm going to do is I'm looking for at least 2 points where I can connect a line. And if I come up to about right here, right around $15, I can at least say, actually just slightly higher than that. Let's snug our line up here. And what I can say here is I can say, wow, okay, I've got a lot of support happening right in through here. And I got a couple places that were a little bit lower, but several places. The primary turning point was right there, and that turns out that it's about $15.40. Okay, so that's where our line is going to go. Now I'm going to keep coming up, and I'm looking for at least 2 turning points, ideally 3 or more. And what I want to do is I want to capture as many turning points on here as I can. And so there's going to be one right there. Let me put that in there. And that's a turning point, that's turning point, that's turning point, and then we had some happening right there. So all of that is a major area of turn. Now there's maybe some internal turning that's happening in here around 1750, but it's just not quite as clean, so I'm going to leave that line off the chart. one of the things that you're going to discover as you get better at this is which lines to leave off the chart. There's no rule to it necessarily, but sometimes you kind of discover that certain lines just aren't really as important. And as you get more practice and you do this more, you'll discover that. I'm going to keep rising up through here, kind of scanning left to right with my eyes, and I'm going to put another line right here. If I can get it to snap in there. There we go. And so what you're seeing here is you're seeing a turning point right here, and you're seeing some congestion right there and a strong turning point right there. So there's at least two and a lot of congestion in the same area. And I'm just going to do that going up all the way through here. So let's look at this turning point right here as I zoom on up here, kind of looking left to right with my eyes, scanning. I see there's a major turning point coming into play right here. Now, why did I pick that spot? Well, look over here and you notice this was a major turn. We'd had a major sell-off. We stopped at that turning point and we moved higher. So that turn is going to have a little bit more importance maybe than some of these in here, which were obviously in the same vicinity, but not exactly in that price point. And so if I had to pick between them, I'm going to go with the one that turned the entire trend. What I often will do also, if you look in through here, you can see there's another little turn that several lines lined up on right there. And that puts our two lines very close together. But what you see is you have a lot of activity that kind of happened right on that second line that I drew. And in the future, you'll discover that this whole area becomes what we would call more of a zone. Instead of just having a support or resistance line, it's going to be kind of a zone area. And it will work the same, but you'll have a little bit more space that you'll be working with in that case. So we're going to keep on coming up through here, scanning left to right. And as I get on up here around $30, I look to the left and I see there's quite a bit of turning action that happened right here. I got 2 points there. I've got a lot of congestion in here. I've got one right there. I've almost got one in there around August of 2010, very close right in here and here and here. Obviously, that's a pretty important turning point right there around $30 a share. So we will mark that line. And then we're just going to keep coming higher, and I'm just going to chart the entire stock. And as I do this, I'm going to start moving a little bit faster here in the interest of time and preventing everybody's boredom. But we'll just keep marking this. And anytime I take a stock that I've never traded before, this is how I start the analysis. And then these lines, I'm going to leave them on the chart. And I will leave them indefinitely. Sometimes I might adjust them just a little bit if it becomes apparent that one of them is really happening in a different price point. You know, maybe it's off just a few cents. And I will make those adjustments as time goes by if needed. Let me kind of point your attention to this area that I'm looking at right now. I'm going to draw a line right here and here. And it looks like we've got lines everywhere because we kind of do. Right in through here, just so happens that there's a lot of turning points, a lot of historical action that happened back in 2008. A lot happened here in 2011. And then we've got a lot that lined up here in 2012 and 13. Sometimes you'll go and you'll have an area where every dollar or two you've got a turning point. And in the future, whenever the stock falls down into that area, what will happen is that whole area will kind of become a congestion zone. And what you see happening between about $40 and $45 a share is there's just a lot of congestion that happens in there. And that's why we end up with so many turning points in a place like that. All right, so I'm going to keep coming higher here, and I'm going to be able to snap a line right there. It looks like I actually missed one that I can put right in here. Now, I don't love... Here's why I'm putting this in here. It looks great here. It does not look great over here back in January 2011. And so, you know, what I don't love is I don't love when it doesn't look clean like that, but I'm going to typically go with the more recent price action. That's where it's a little bit cleaner, and I'll come a little bit lower over here for the 2011 turns, and we'll leave it as such. As we continue moving higher, I've got some obvious turning action happening just north of $55 a share, so I'll put that in there. And just kind of scan through here to see if there's more in there that I might have missed. But I think all of that's fairly, well, we might be able to put, we may see some turning there around $52, but I don't think that's too important right now. We'll leave that off the chart. And then when you get into an area where there's not a whole lot of action to draw off of, you're just going to take the turns that are there, and you're going to kind of chart around what there is to work with. And you just know that moving forward, you may may have to clean that up a little bit. And so there you have it. There's Halliburton. And what we've done now is we've basically charted this thing, and we've got a grid that we can start trading with. And if you look at those turning points, you say, wow, most of those are really quite spot on to a specific price point. Now, the next thing we want to do here is we want to test it a little bit. One way that we test it is we look at the turning points that we've drawn, and we look at the intraday swing highs and swing lows. So I'm going to draw some circles in here, and I'm just going to draw your attention to some areas. And it's not hard to pick these areas. What we're doing is we're just taking the kind of some major turning areas. Anywhere there's a lot of congestion, I'll circle those. And what we're looking for in here is we're just looking to see what the intraday highs and lows confirm. Maybe they tell us, hey, those lines are exactly where they need to be, or maybe we see some additional information that we didn't see before. You know, this particular step doesn't necessarily change a whole lot, but it is insightful. So what we're going to do is we're going to switch over to our candlesticks and just kind of look at some of these areas in red, and I'm going to toggle back and forth with my candles, and you're going to see some interesting stuff. As I flip over to the candles, let me start marking some areas. And as I mark some stuff, these will be kind of interesting because it'll bring your eyes to the location that I want you to take note that there's some extra confirmation. Now, again, this confirmation is not essential. It doesn't have to be there, but it is quite interesting, and it helps kind of give us confirmation and confidence that we really are drawing our turning points in the right spot. So I'm sure I missed quite a few here. Let's toggle back and forth to the line chart so I can do my own vision and see what I've got happening here. Okay, right up in through here, you should take note when I toggle back and forth. There's quite a bit of confirmation that's starting to happen in there. And just look at some of the blue arrows. I didn't mark all of these, but just look at some of the blue arrows as I toggle back and forth. And you can see how the intraday candlestick brings some additional confirmation. And you see some of those turning points just really line up even better when you go to the candlestick. Now, this brings up an interesting question. People will say, well, why would you not just start with your candlesticks? Why would you draw off your lines to begin with? And the answer is because when we draw off the lines, we have a much cleaner, tighter corner that we can draw off of, and it allows us to get a better initial line in there. Now, once you've got it drawn in with your lines, we often come back and we'll look at the candlesticks and we may adjust a little bit. But this chart that I've just drawn here, the grid that I've just drawn, is very good. It's going to serve us very well moving forward in the future. If you zoom in a little bit, you can see just really quite nicely how well Halliburton has lined up in this particular area. I also see a couple of additional things that I think I'm going to slap in here. There was some congestion that happened right here. I want to get that on the chart just so we've got it, and we're seeing that in the future. And then this particular line was maybe a little bit low, so I'm going to pull that up just a little bit there, and that contains more of the price action. And that's going to look better for our more recent time period. So the next thing that we want to do in testing this, you know, it's easy to draw lines off of historical data, but the thing that people always wonder is, well, how do I know that it's going to work in the future? How do I know it's going to work in the future? And the way that I like to test this is I say, in theory, if it's going to work in the future, then it should have also worked in the past. Yes? And so what we want to do is we want to go back into time and see if these same lines were working. Because if they work now and we expect them to work in the future, then they should have been working for a while. And so you can look at the bottom of the chart. You can see that this was basically October 2007, moving up through December 2014. And so what I'm going to do is I'm just going to drag the chart over. And as we drag the chart over, in the bottom right corner, you now see 2008. And 2007, that was all the stuff that was on the left. And all this new data, this is information that we did not see before. And it's always interesting to look at it and notice, wow, these turning points were still working back in 2005, and we didn't have any of that data on our chart, but yet they were working way back then. Okay, so let's come a little bit further back here and see what else we've got. Okay, now there's some areas down here at $4, then obviously we weren't drawing in that area. But we can come back to 1998, and the general areas of $20 a share, these areas were working really relatively well. But I noticed something in here, and you won't always notice this depending on how your charting software draws it. But in Trade Navigator, you're going to see a little S diamond down here. That indicates that there was a stock split. And so what I can do, we can hover over it, and it will tell us, oh, there's a 2-for-1 split. That means that they split the stock. Well, your chart splits too. So what I'm going to do here is I'm going to show the unsplit prices, and you're going to see, look at that. Now we go back to 2000, 2002, and oh my goodness, the whole grid just took on a different level of lining up all the way back in that time period. Look at this. Look how really perfectly Halliburton lined up all the way back into 2001, 2002. If we come further back in history now, all that area that looked a little bit junky, look at that. It lines up just perfect. We're now coming back to 1996, and within margin, this stock lines right up with this grid back to 1995, and frankly, we probably keep going here, and we have general back to 1990. I mean, we've got a lot of historical performance here that we can draw from. So the question then comes back. We say, well, okay, if we can go back to 1990, 1995, and here we are, it's 2014, 2015 on the chart, is it realistic to say that based on what it did historically, that future behavior, and I'm not talking about performance, but future behavior is going to be similar? And I think it's a very good assumption. And so what we're looking for here is we're not saying, okay, today it's January 2015. I expect by the end of 2015 the stock's going to be at $75. That's not what we're saying. What we are saying is this is a general grid. And based on what it has done historically, the odds are that we're going to continue trading within this grid. And, maybe I don't know exactly where we're going to be in 9 months, but I got a pretty good idea that in the next month, I'm either going to be stuck right here. I may have broken out up to one of these resistance levels. Possibly, if things really got going in a month or two, I might be up here at $50 a share, because that's a logical place for things to be. Or if things were to head on down, and this bearish trend will continue, we could say, in the next month or two, $35 is reasonable. And if we don't find support there, then $31.40 is reasonable. If we don't find support there, then $29.20 is reasonable. And so you start to have a grid that you can draw through. And while we're not sitting here at this point projecting which way the stock is going, what we are saying is we're saying based on this grid, we've got reasonable confidence that if the stock goes up, this is where it should be trading. And if the stock comes down, this is where it should be trading. And consequently, now we've got some targets and we've got some ranges and we know what we're working with. And then we can build the rest of our analysis from there. So that's how we start charting a stock. And now you can go do it yourself in your own charting software.